Welcome everyone to this Ethics Masterclass by Kaplan. My name is Neil DaCosta. I'm a Kaplan Senior Tax Tutor, and what I'm going to do today is give you the key elements of ethics that you need to know to help you do these ethics questions in the exam. So it doesn't matter which professional qualification you're studying, whether you're studying CIMA, AAT, ACCA, ACA, CTA, all the qualifications have an element of ethics in it. So by you understanding ethics, you'll be able to pick up these marks very quickly in the exam questions. So let's get started without any further delay. So in terms of ethics, the first thing I recommend you do is learn the key ethical framework. And the easiest way to do this is to remember the mnemonic COPIC. Okay, so COPIC, confidentiality, objectivity, professional behavior, integrity, and competence. So these are the 5 key ethical principles that you need to remember. So the 5 key ethical principles can be remembered by the mnemonic COPIC. So let's start by looking at confidentiality. So what do we mean by confidentiality? Well, all we mean here is you must not disclose employer or client information to a third party without getting specific written permission. Okay, so let's say for example, a government organization asks you something about your employer. What you have to do is you have to get written confirmation from your employer before you discuss with the government official. Similarly, let's say you're giving tax advice to a client and you receive a letter from HMRC. What you need to do is you need to get permission from the client before you speak to HMRC. The second principle you need to remember is objectivity. So what do we mean by objectivity? Well, with objectivity, when you're acting as a professional accountant, you must avoid any potential conflict of interest. Now, should you find yourself in a compromising position, consider disclosing the conflict to all parties concerned. Okay, so tell them about your conflict. So you're very open in the sense that you do have this potential conflict of interest, or consider removing yourself from the situation. So for example, let's say you're responsible for allocating tender contracts, and one of the bids for the tender is from a company owned by your brother. So clearly here you have a conflict of interest, because while you're trying to act in the best interest of your employer in awarding the contract to the best contractor, you also want to help your brother. Okay, so you've got this conflict of interest. So what you need to do is disclose this to all the parties concerned, like your manager and everyone else who's put you in this position of responsibility. And you might say, look, it's probably best for me not to actually award this contract because we have received a bid from my brother's company. So to objectively decide who the best contractor is, perhaps someone else should make the decision. P in COPIC stands for professional behavior, and what we mean by professional behavior is we have to avoid any actions that might discredit the profession. And the important thing here is all the institutes, all the associations, they say that you must act in a professional way even when you're not actually at work. Okay, so in your private life, in your social life, you must behave in a professional manner. I stands for integrity, and what we mean by integrity is you must be straightforward and honest in all your dealings. So the example I often give my students is I tell them once I was in a supermarket and I noticed there was an envelope that had fallen down, and I picked up the envelope and I found the envelope was full of cash. So, what would be the correct way of me dealing with this? Well, I had to show integrity. Okay, so I couldn't very well take the envelope full of cash and put it in my pocket, because clearly, someone had dropped this envelope, and this person would be very upset once they realized that they had lost this money. At the same time, I was reluctant to hand it in to perhaps a member of staff in the supermarket in case they kept it. So what I instead decided to do was I went to see the manager of the supermarket, and I gave the manager my phone number, and I said, look, if someone comes up and says they've lost any money, please ask them to contact me. And sometime later, a lady called me up and she says, look, I've lost some money. It was for my son's birthday party. I was doing some shopping and I've lost the money. And I asked her, how much did you lose? Okay. And when she told me the amount, I knew that she was the correct owner, because she knew exactly how much money was in the envelope. So I was able to give her back an envelope, and she was very appreciative, and they were able to proceed with their son's birthday party. So you have to show integrity. And the last factor we look for is competence. You must ensure you have the professional skill set and expertise to carry out your duties or meet the client's expectations. For example, let's say we have an audit firm and we're dealing with a large company, and this company has got operations in several different countries, so it's dealing in multiple currencies, it's got different types of group companies, it needs to satisfy different types of regulations. It's very important that we have the competence to audit a company like that. We must make sure we have sufficiently skilled staff who understand all the different technical implications of carrying out this audit. So a quick way of you remembering the mnemonic is COPIC. So confidentiality, objectivity, professional behavior, integrity, and competence. And this simple mnemonic will help you remember the ethical code that professional accountants have to follow. So let's now take a look at a couple of different scenarios. So let's say from an audit point of view. Okay, so we're looking at an audit ethical scenario. So let's say the audit firm has been approached by a prospective client, Miss Raybone, who is the MD and a shareholder of the Raybone Group, with a view to our firm acting for them. And Miss Raybone has been referred to our firm by one of his customers, who's a long-standing existing client. Okay. So what you'll be asked then is, what information do we require from the client, and what actions do we need to take before accepting the client? Now, we've already established that the client has signed the preliminary engagement letter giving us permission to contact third parties. So we have signed the preliminary engagement letter. And what the examiner is asking you here is, what information do we need from the client, and what actions do we need to take before accepting the client? So what we have to do is we have to verify that the information given to us from the client is correct. We need to verify things like the client's identity, the client's address. Okay, so what you tell the examiner is, we need proof of the client's identity, for example the passport. We need proof of the client's address, things like utility bills. We need details of the group structure, directors, and the shareholders. In addition to that, we also need the place of business and the registered office. So the place of business is not always the same as the registered office. We also need certificates of incorporation for all the group companies. So the company's birth certificate is called a certificate of incorporation. So we need certificates of incorporation for all the companies within the group. In addition to this, we need a previous set of audited accounts for the group companies. So we need a previous set of audited accounts, and we also need details of existing auditors and bankers so we can contact them. And what you then explain to the examiner is, the reason we're doing this is because auditors must comply with the professional code of ethics, which include things like professional behavior and integrity. So when you're answering the questions, it's not necessary to talk about all 5 principles. Generally 2 principles should suffice. And as a result, we need to contact the existing auditors to establish if there are any circumstances which may preclude the client acceptance. Now, if any threats exist, so any threats to the professional code of ethics, based on the previous client actions, such as, for example, lack of internal controls or reluctance to provide timely information, what we must do is we must implement safeguards to reduce the threats to acceptable levels before accepting the client. After considering the ethical principles, we must also consider our money laundering obligations. And at times the money laundering obligations may be more rigorous compared with compliance to the Professional Code of Ethics. And as a result of our investigations into the client affairs, if we discover any matters that need to be disclosed under the Public Interest Disclosure Act, we should notify the National Crime Agency without actually tipping off the client. Finally, because we've been referred to by an existing client, we must check if acting for the new client impacts on our existing client. And if so, we should observe client confidentiality and avoid any conflict of interest by getting a different team to act for the new client. So perhaps because we're dealing with the existing client, we're privy to certain business information about that client, we must make sure that there's no conflict of interest in acting for the new client. So this is a very, very topical audit scenario. Okay, so whereby you're approached by a prospective client who's been recommended by an existing client, and you ask, what information do we require from the client and what action do we need to take before accepting the client? So what you do is you start by talking about proof of the client's identity, proof of the client's address, details of the group structure, directors and shareholders, place of business and registered office, certificates of incorporation for all group companies. We also need a previous set of audited accounts for the group companies and details of existing auditors and bankers, because we are going to contact them. And the reason for this is because we comply with the Professional Code of Ethics, which include, amongst others, professional behavior and integrity. So we need to contact the existing auditors to determine if there are any circumstances which may preclude the client acceptance. And if any threats exist based on the previous client action, such as lack of internal controls, or perhaps the client is always reluctant to give us information on time, we must implement safeguards to reduce the threats to acceptable levels before accepting the client. And then, even though the question at times is silent, you are expected to consider the money laundering obligations. And it's important to bear in mind that the money laundering obligations may be more rigorous as compared with the compliance to the Professional Code of Ethics. So as a result of our investigations into the client affairs, if we discover any matters that need to be disclosed under the Public Interest Disclosure Act, we should notify the National Crime Agency without tipping off the clients. Let's say, for example, we discover that the client has several offshore accounts with very large balances in them, and we can't see evidence of these offshore accounts in the actual financial accounts. Then we are obligated to disclose this to the National Crime Agency. And finally, we must check to see if acting for the new client impacts on our existing client, and if so, we should observe client confidentiality and avoid any conflict of interest by getting a different team to act for the new client. So one of the things we've mentioned so far is ethical threats and the necessity of reducing the threats to acceptable levels. So the next question we need to ask is, what are the different ethical threats? And here I'm going to give you another mnemonic, and this is SIFAS, S-I-F-A-S. And you can remember this mnemonic as study in depth for accountancy success. So study in depth for accountancy success. So we're taking study in for accountancy success. So S stands for self-interest, and this can occur as a result of your own or close family interests, and these could be financial or other interests. I stands for intimidation, and intimidation happens when you're prevented from acting objectively by actual or perceived threats. F stands for familiarity. This is where you become sympathetic to other interests due to a close relationship. So your professional judgment is compromised. An example of familiarity, let's say you're responsible for approving expense claims, but because one of the managers is your close friend, when this manager makes an expense claim, you don't bother to check the documentation this manager is using to collaborate his claim. So here the reason for this is because of the familiarity. A stands for advocacy, and what we mean by advocacy is this problem arises where you're promoting a position or opinion instead of maintaining an objective, neutral perspective. This happens very often when we might be interceding for a client. Okay, so let's say you're interceding for a client to perhaps the bank or perhaps a government body, and what you do instead of maintaining a neutral perspective, you start pushing the client's agenda. So you have to be aware that by doing that you are experiencing a threat to the professional code of ethics. And S finally stands for self-review. So this is where you're evaluating your own work and you may be tempted to give a favorable opinion. For example, let's say you're responsible for coming up with ensuring that people have met their performance targets for the year, but actually included in that is also checking your own work. Okay, checking to see that you've also met your performance targets for the year. This can happen within a small company, for example, and as a result, you might give yourself a more favorable opinion than you deserve. So the ethical threats, like I said, can be remembered by the mnemonic CFUS, and you can remember that by thinking of study in depth for accountancy success. So the first mnemonic I gave you is COPIC, and this is the second one, which is CFUS. So study in depth for accountancy success. So S stands for self-interest, and this can occur as a result of your own or a family financial interest, for example. I stands for intimidation. This happens where you're prevented from acting objectively by actual or perceived threats. Let's say you've been asked to make a provision for a future liability the company is going to incur, and you haven't seen sufficient evidence of this, but what the director tells you is, look, if you don't do this, you don't have a future in the company. So here you have an intimidation threat. F stands for familiarity. This is where you become sympathetic to other interests due to your close relationship, like let's say a friendship, so that your professional judgment is compromised. A stands for advocacy. This problem arises where you're promoting a position or opinion instead of maintaining an objective, neutral perspective. S stands for self-review. This is where you're evaluating your own work and you may be tempted to give a more favorable opinion. Okay guys, so the mnemonic you need to remember for the ethical threats is CFUS. So study in depth for accountancy success. So self-interest, intimidation, familiarity, advocacy, and self-review. Earlier on, we looked at an audit scenario and how ethics could be examined in auditing. So when we look at the threats, we're going to look at a management accounting scenario. So we're now looking at how ethics could be examined in a management accounting scenario. So let's say we've got this accountant and her name is Charlotte, and Charlotte is responsible for preparing the employee reports on which the year-end bonuses will be awarded. Her manager has insisted that any contracts that do not have a specific salesperson should be allocated to her. So here the company awards commissions based on which salesperson was responsible for getting the contract. but obviously there are certain contracts that may not have a specific salesperson. So what the manager has decided is the manager wants to have the commission for these contracts that don't have a specific salesperson allocated to them. And if Charlotte does not comply with the request, the manager has implied that she does not have a future in the company. Okay, so you can see from this the manager is trying to intimidate Charlotte. In addition, Charlotte will also be preparing her own performance report and is tempted to show that she's achieved all her objectives set out in her performance appraisal. So what you can see here is Charlotte is experiencing a self-interest threat. So we are asked to explain what threats Charlotte is experiencing and recommend her course of action. So one of the things you can do is you can, when you're watching this, I recommend you can pause the video, try and think about the answer a little bit before you then look and see what my explanation is. So what Charlotte should do is she should initially document all the communication involved between her and her line manager, providing dates and times, as well as gathering all the relevant documentation, such as emails, any communication that she has had between her and her manager. And clearly Charlotte is experiencing an intimidation threat from the manager. What she should then do is, once she's documented everything and she's got all the evidence, she should then escalate it internally within the organization further up the management scale, ensuring a member of HR is present. So there is someone else there, perhaps someone from human resources, who's also sitting in on the meetings. If Charlotte then finds that she's ignored internally, that's when it's a good idea for her to perhaps contact the Professional Institute's ethical hotline. So the Professional Institutes have got an ethical hotline that you can access guidance from, and they will advise her on the next course of action. Now Charlotte is also subject to a self-interest threat, as she's tempted to suggest she's met all her objectives in order to make her own performance better than what it actually is. So what you'd recommend that she does is remove herself from the situation by requesting an internal transfer to another department, because obviously she's being intimidated by her manager. If she's still unsuccessful escalating it internally, she should consider informing the media or resigning from the position instead of engaging in the unethical behavior. So the important thing is to take a very firm view and not to actually engage in this unethical behavior. So if we look at the threat again, so as we said, Charlotte is responsible for preparing the employee reports on which the year-end bonuses will be awarded, and her manager is trying to intimidate her. Okay. In addition, Charlotte is preparing her own performance report and is tempted to show that she's achieved all the objectives in her appraisal. So we start by advising Charlotte what she should do, and what we said is she should initially document all the communication involved between her and her line manager, providing dates and times, as well as gathering all the relevant information. And she's experiencing an intimidation threat from the manager. So she should then consider escalating it internally within the organization, further up the management scale, ensuring that a member of HR is present. Now, it's only if she's ignored internally should Charlotte then consider contacting the Professional Institute's ethical hotline, who will advise her on the next course of action. She's also subject to a self-interest threat, as she's tempted to suggest that she's met all her objectives in order to doctor her own performance to make it seem more better than what it actually was. Okay, so what you'd recommend that Charlotte does is she should remove herself from the situation by either requesting an internal transfer to another department. Perhaps she can't get on with this existing manager anymore, so she can try and get an internal transfer. But if she's unsuccessful, so everyone in the organization is putting pressure on her to actually go ahead with this unethical behavior, then she should consider informing the media or resigning from her position instead of engaging in the unethical behavior. So that's a very good ethical dilemma in a management accounting context. So we started off by looking at ethics in an auditing context. We're now looking at ethics in a management accounting context. And the last thing we're going to do is we're going to take a look at a scenario, an ethical scenario in a tax context. So let's say we've got Sanjay here, and Sanjay is a tax consultant, okay? And Sanjay is an existing client, and we are giving Sanjay tax advice. So Sanjay is an existing client, and he's just disclosed to us that he's received an unexpected VAT refund from HMRC. Okay, so Sanjay has been so happy. He's got this £20,000 come into his bank account from HMRC. Okay, so what he did, he was quite prudent. He waited 6 months, guys, before doing anything. But now he started spending the 20,000, and he says, "Look, I don't see why I am responsible for telling HMRC about their mistakes." Okay, and we're asked, how should the tax firm treat this situation? So, what are our responsibilities from an ethical perspective? Because Sanjay has received this VAT refund of £20,000, and he's now started spending the money. Okay, so do you think Sanjay is obliged to notify HMRC of their mistake? So once again, I recommend you pause the video, think about it for some time, think about a suitable response before you listen to the rest of the video. So what do we need to do then? Well, what we should do is we must initially investigate Sanjay's VAT returns to determine if he was entitled to the VAT refund. If he was, then no further action is required. So if he was entitled to the 20,000, he's received it, we don't have to take any further action. But if he was not entitled to the VAT refund, we should recommend that he discloses this to HMRC and refunds the full 20,000. Otherwise, he will be liable to both penalties and fines. Now, Sanjay could refuse. He might say, "Look, I don't want to take your advice. I've kept the money for 6 months. No one has written to me about it. I've started spending the money." What we need to do then is we must resign as his tax advisor, and we must notify HMRC of our resignation without giving them the reason why, because we have to protect the client confidentiality, and this is likely to precipitate in an investigation into Sanjay's tax affairs. So HMRC would now start investigating why we've resigned as his tax advisor. In addition here, Sanjay would now be guilty of illegal tax evasion. And tax evasion is a criminal offense, so we must recommend that he seeks legal advice. We must also consider our money laundering obligations and the requirement to make a money laundering report regarding the £20,000 VAT refund. This would override the ethical principles such as client confidentiality. So once again, what I'm trying to show you is at times our money laundering obligations are more rigorous compared to the ethical principles. Okay, so from an ethical perspective, we protect the client confidentiality, but at times because of our money laundering obligations, we do need to make a money laundering report. So we'll just recap on what we've said there. So you are working as a tax consultant, and your client is Sanjay, and he's received a VAT refund of £20,000. Even though he didn't expect it. and he kept quiet about it for 6 months, but now he started spending the 20,000, and he doesn't see why he should notify HMRC of their mistakes. So what are our obligations as his tax advisors? And what we said is what we need to do is to initially investigate his VAT returns to determine if he was entitled to the VAT refund. If he was entitled to the 20,000, we don't have to take any further action. But if Sanjay was not entitled to the VAT refund, you must recommend that he discloses this error to HMRC and refunds the full £20,000. And if he doesn't do that, he will be liable to both penalties and fines. If he refuses, we must resign as his tax advisor and notify HMRC of the resignation without giving them the reason why. And this is likely to precipitate an investigation into Sanjay's tax affairs. Now, Sanjay would be guilty of illegal tax evasion, which is a criminal offense, so we would recommend that he seeks legal advice. And we'd also consider our money laundering obligations and the requirement to make a money laundering report regarding the £20,000. And these money laundering obligations are very rigorous, and they override the ethical principle of confidentiality. So by doing that, I've gone over 3 very topical scenarios: an auditing scenario involving ethics, a management accounting scenario involving ethics, and lastly a tax scenario involving ethics. So what are the next steps therefore, guys? So we're coming to the end of our ethics masterclass. Well, what I recommend you do is follow Kaplan on social media and watch our YouTube channel videos. So Kaplan, where we've been training the professional finance professionals in the for over 70 years. Okay, so we're well established. We're the best professional training company in the world, and I recommend you use all the free resources we offer. Listen to the Kaplan podcast. We also offer, we've come up with a great award-winning podcast, and sign up to Kaplan Insights, which is our digital newsletter, to get free study support. You can connect with me on LinkedIn. So my name is Neil DaCosta. So if you just search for me on LinkedIn, Neil DaCosta tax, connect with me. We put up lots and lots of useful tax resources, and I'd like to wish all of you the very, very best in your future finance career. And I hope you've enjoyed this masterclass, and you look out for any future classes that we offer. All the best, guys.